So abhi Nifty is at what, 23,000. If you take a 10-year view at 12%, markets would be somewhere between, let's say, 65 to 75. The kind of mistakes that investors make, that they come in at peak and they redeem at bottoms. If you can really think about it in terms of 10 years, 1 decade, 2 decades, it gives you huge advantage. At least the new money you should definitely not put in mid cap, only the large caps and small caps, rather than focusing on which specific company, whether it will be wind, solar, nuclear, or what it will be. If you just look at it as a whole and see it as a sector, that's a much better bet to take rather than trying to figure out.
Awesome. Hi, Vivek, sir. First of all, thanks a lot for coming on the podcast. I know you're very busy and you manage a lot of money, but I want to ask you a lot of questions today to get some insights from you for the audience as well. So, hope you're okay with that.
Definitely okay. And hi, looking forward to talking to you.
Superb. So, Vivek, I want to understand one thing from you. How was your journey into stock markets? How did you enter this?
Okay. So by education, I'm an engineer. So when I was in IIT Kharagpur, that was 99 to 2004, there was this, about money control. So money control was the only website at that time I knew, and you could create those virtual portfolios. And the markets were also booming at that point of time. So that was the time I started creating some virtual portfolios, started reading some bit about few companies, and I would select them in my virtual portfolio and I would see them going up. So that was the initial starting point, and markets always puzzled me. It was a very intricate, very interesting puzzle to solve. And that's how I got into markets. That after passing out, for 1 year, I went into Oracle. But that didn't really appeal to me. I thought this is not what I want to do all my life. Markets were really much more exciting for me. So I had started investing some bit of money, whatever I had started earning, and I would see all these stocks, whichever I was buying, they would just keep going up and up. And I thought I had some knack of selecting stocks. Later only I realized that it was the markets, not me really. Yeah. But that was how I got started during those times, 2004, 5, when everything was booming. That was the time, yeah.
But that's crazy because 2004, 5, 6, 7 was considered one of the greatest runs, right? After 2000 crash, we saw a very good rally till 7, 8. And then the market fell down. How was that experience for you?
Yeah, 2008. So, see, what happened was I was not too much into investing. Because what happened after my one year job in Oracle was I started searching for some job in markets, something to do with trading or investing. I didn't really have any idea about what investing is, what trading is. But then I was lucky enough to get into futures first, which was into trading into international markets. Okay. So I was the first crude oil trader there. So that time I had understood a bit of trading, right? As I got started at that time. And trading is quite different than investing, right? So obviously when you are trading 11, 12 hours a day, you would, after a point of time, I started getting a hang of it. My risk management was pretty good. So luckily from the beginning, I was doing very well in trading. Wow. Internationally trading in crude oil, natural gas, gasoline, all this sort of stuff. And then I started adding some bit of commodities also. So that's how I got started, and that was my first job. Yeah, that was it actually.
Wow. And do you remember the 2008 crash? What?
Yeah, definitely. We were trading exactly. 2008, what happened was, again, trading wise, it caught us off guard. That the kind of volatility, we had never seen that kind of volatility.
In commodities?
Yeah, in every asset class, right? And even in commodities, it was very, very volatile. But then when we learned to handle that volatility, after a few months, we were doing much, much better than what we were doing earlier. So in that sense, it was a great period for us. Now I remember in terms of investing, I had close to zero idea about what investing is, what systematic investing is now, and the kind of education and knowledge these days investors have. It was not available at that point of time, right? So I was purely into trading, and I remember even in 2008 crash, we were obviously trading international commodities, but I had started trading, or you can call it investing, whatever you call it, in Indian stocks also, right? So I would buy and then they would shoot up and I would sell, all of those sort of things. So I was making some money, but now looking back, I thought had I knew what investing is, I could have really made a killing at that point of time, really. because I had zero understanding of investing. I would keep on booking profits, keep on buying and selling, but investing really is not. It's altogether a different ball game, right? So income wise, I was doing very well because my trading was doing well. So my income was very good. But in terms of creation, wealth creation, you need that investing. Right, you would hear it from all the good investors, big investors, that they started off maybe as a trader, but eventually they got into investing. Right, so investing, I really, when I left futures first 2015, after 10 years trading, I joined ST Advisors. That's when I really, last 8 to 10 years is where I really thought about investing hard and really learned what investing is. Still learning, but yeah, last 10 years have been majorly into Indian equities investing.
Wow. And very interesting parallel you drew, right? Do you think the retail audience is also doing this today, where they're investors long term, but they're also doing buying and selling almost like a swing trader? Even though they say we are investors.
See, even if you look at not only stocks but even mutual funds data, if you look at, I think the data says something like that more than 50% of investors really redeem within first 2 years. Correct. So yeah, they don't. I think patience has really, even in spite of all this knowledge going around, I think patience levels have come down. I don't know how true this is. I was reading one statistic that the average holding period in mutual funds over the last 10 years has come down from something around 3 years to 2 years. I don't know the source and how true it is, but it's possible.
So compounding never comes into effect.
Exactly, right.
Very interesting, very interesting. So after you joined ST, how did that change? What type of frameworks you built for, let's say, investing? Now you've moved away from trading.
Right. I think broadly, two things I would say I learned. I realized their importance. One is thinking long term. Okay. In trading, you're always thinking your next move, right? Timing is very important, whether you are buying at the bottom or selling at peak, right? So timing is important. Short term nature, you do never really thinking about long term. So here I think I started thinking about long term, and long term, at least for me, and that's what I say to all the investors, that long term, at least think about it in terms of decades. If you can really think about it in terms of 10 years, 1 decade, 2 decade, it gives you huge advantage. And second thing I would like to emphasize, and obviously there are many other things, but broadly these 2 points is about asset allocation. We hear some bit about asset allocation, but most of the talk that goes around, even in investing, is about which specific stock to pick, which specific fund, which specific theme. I think asset allocation, if you start from top down approach, look at asset allocation where my money has to be, whether it's stocks, bonds, real estate, or international equity versus Indian equity, those sort of things. And then maybe drill down to which fund or which stock. That's a much better approach rather than just thinking about which stock should I buy and which is the next multi-bagger. Because see, think about it. The way I would want to emphasize the importance of asset allocation would be, think about, let's say, cricketers, right? Even the 100th topmost cricketer in India would make much more money than the number one ranked TT player in India. So it's important which game you play. So that's how I think about asset allocation, that where your money is. Taking an example from last year, let's say, it's just 1 year period, but let's say US markets gave about 20-25% returns last year, and Indian markets were about 5-7% in that range. So let's say you are a bad stock picker, even in US markets, if your asset allocation is right, that had you invested some bit of money in US equities, and even if you underperformed by say 5%, so वहाँ पे 20% it gave, minus 5%, you still would have gotten 15%. And let's say you are a excellent stock picker but not a very good asset allocator, you had all your money in Indian equities which gave 5-7%, you are able to beat the market by 5%, you still made maybe about 10-12%. But you still underperformed that guy who allocated his assets to US markets, right? So that is much more important, the asset allocation. So these two things I would say, one is thinking long term, and second is asset allocation. Those two things I think about them a lot.
And do you think today is also a good time to allocate outside India? A lot of people said, oh, now US is at the peak, so you should invest more in India because India has fallen so much, which is also correct. But asset allocation should say that doesn't matter the timing, the time frame is important.
In US, there are definitely, maybe there's some assets which might do well, But I think India definitely is at a place right now which to me looks much more attractive. India, broadly emerging market equities over developed market equities, that is one. And within emerging market equities, I think India is definitely very, very attractively placed right now, given the correction we have seen. And since the peak, September 24 peak, the kind of correction we have seen in large caps, small caps, mid cap also to an extent. But yeah, I think Indian equities is something I'm much more bullish on right now.
Now, I want to ask you a more outcome oriented question, right? Let's say there is a guy who wants to change his asset allocation today and he wants to do some allocation outside India, let's say US, 15-20% as you said. But he's not a stock picker. Let's say, because here you have mutual funds to do that. There, if I had to do, let's say, an index investing, what are some easy ways you can start off if you want to do outside India?
Outside India? So outside India, there are multiple few ways. One is obviously there are few mutual funds that are listed in India, but there you have the limit.
I can't, yeah.
So those are, you don't really have that kind of option. That option is closed. Otherwise, that is a pretty good option.
Yeah. No, or else if I want to go there, what index is
so
good?
The other two options would be, one is you open a brokerage account with a US broker, let's say Interactive Brokers or someone like that. Right. That is one way. Or the second way is through the Gift City. Now you started seeing like Parag Parekh and there are few more others who have started listing their products in the Gift City. So those are the two broader ways. If you want to do stock picking yourself, which I personally don't recommend so much, then Interactive Brokers kind of you directly open an account with the broker and invest via them. Or Gift City, I think, is a pretty good way. And one of the factors is also because I think in US, if you're investing in US, if something were to happen to you and if you have invested through a broker, the US government can practically take away, I think, 40% of that money, really, the inheritance tax laws. But if you go via Gift City, now these Gift City is a fund of fund structure, right? So there you are completely safe. So that is obviously one big reason. And secondly, I think through Gift City, you obviously have PMSs also, but primarily I would say that I believe mostly in index investing. So if you can go via these Gift City funds, feeder funds, yeah.
But these are not open for retail public, right? It's expensive to get in.
I think the limit right now is $10,000, so about 9-10 lakhs, much lower than at least a PMS. But yeah, if somebody were to get started at 1-2,000, yeah, then they are not an option. But about $10,000 is where the
almost towards
really
the SIF kind of a range.
That kind of range, yeah.
Very interesting, very interesting. And I want to ask about ST, right? So at ST, what are the different philosophies or frameworks you follow? So I know you have a quant mechanism as well. So what are the different things, if you can tell me?
So primarily ST is a quant, is a firm that has, that has, I would say, pioneered quant investing and trading in India. Wow. So we got started in 2008-9. That's the time our founder Sandeep Tyagi, he had earlier founded a data analytics firm which he sold off to EXL, and using that money he created sort of a family office where we started out as a proprietary trader. We were just managing our funds, but then we realized the kind of trading that we were doing, the kind of investments we were doing, we could as well offer it to the outside public. So that's when our first arbitrage fund, iAlpha, got started in 2009, which has a unique track record of never losing money, even a single month since 2009, since inception. So every single month it has been profitable, and the average returns have been somewhere around 12% or so. Yearly.
But this is different from your average Joe arbitrage funds.
Yeah, this is slightly different. And maybe you can call it slightly better because the gross returns here are about 12% or so.
Correct.
And very, very stable kind of returns. So that is one product. Obviously, after that, we launched our long alpha PMS, and we have our small case portfolios, and everything is quantitatively managed because we believe that that's what we understand. We are a team of engineers primarily, and we understand data. So that's how we created our portfolios, and it has been doing good. All our products have been able to generate decent alpha over last 5-7 years since inception. So yeah, obviously last 1 or 2 years markets have been tough.
Horrible.
Markets have been tough, but overall since inception we've done fairly well.
And is it like a Nifty 500 kind of a bucket, or you specialize in small, mid, small?
It's full Nifty 500
Okay, entire
or
universe.
BSE 500. That's the benchmark that we take. We select our stocks on the basis of more than 100 factors that we have selected. So these are, you might have heard of momentum, quality, value. These are popular 4-5 factors. Now, within these 4-5 factors, we have created multiple factors. So there are multiple kinds of momentum factors, sub factors you can call it. And we have created other macroeconomic factors also. So factors could be something like oil prices, right? Could be inflation, could be GDP growth rates. These are macroeconomic factors. And then other factors like insider buying and selling. So what are the companies, promoters buying and selling? So these kind of factors. So overall, we have identified about more than 100 factors, as I said, a mix of technical factors, fundamental factors, and macroeconomic factors. And based on historical data, again, out of these 130 factors that we have, we would select the top 10 factors maybe, which are most likely to work well in the current market regime.
Okay, so you have a macro factor filter which is telling you what to do, and then you have the micro factors fillers that are coming in, and then you match the two.
Yeah, so that's how we create our stock selection. Now, at times, what happens is during times of growth, typically mid and small caps get selected much more.
Obviously.
Whereas in interest like these, there would be more focus on large cap, but that is not what we are doing explicitly. It's implicitly, those are the kind of stocks that get selected
From the framework that
from
you
the
have.
framework. So end to end, everything is algorithmic.
Yeah.
Once we have finalized our methodology, then everything gets selected. Obviously, we are very transparent in the sense that we are watching what the portfolios are doing, what each stock is doing, why it got selected in first place, why it's working, and maybe why it's not working also. So those are the things that we keep watching, and from time to time we keep upgrading our models as and when we learn more about markets. That's how it happens.
And any example you have of the past? Let's say there was something that you saw or caught, or the system caught, and that actually ended up being a very good trade.
Yeah, see, there are many. There would be many examples. One of the example could be ITC. What happened in ITC was around after COVID. Also, for many years it was in a flat range. Right, the fundamentals were always good. It's only the price was not moving, and you don't really know the reason. You can speculate this was the reason or that was the reason, but the price was not moving. That was a fact, right? But it was always a good company. So now what happens in quant systems is the way we have designed, and most of the others are also like that. That you give a lot of emphasis, much more emphasis on technical factors, which price is the main factor there, right? Because we rebalance on a monthly basis, so the fundamentals really don't change on a monthly basis. Right, but the technicals could change a lot. So your weightage to these technical factors is much more than the weightage to fundamental factors.
Got it.
Till the time it is not moving, it will have a very good fundamental score, but not a very good technical score. As soon as it breaks out, it will have a very good technical score also, and that's when it gets selected in the portfolio. So at least for those 2-3 years when it was not moving, your money was deployed elsewhere, where it was hopefully making money, but at least here it wouldn't have made any money. And when again it got settled in a range, we were exiting. So this is one example. Another example could also be totally opposite. Something like, let's say, Adani stocks. Fundamentals are also decent in many of those companies. Maybe few of those companies, they were not that great, but technically they were very strong. And that's why they got selected in our framework, and we made good money.
Yeah.
But yeah, obviously towards the end, as soon as they start correcting, we would exit. We would exit because of the technical factors, and because we rebalance on a monthly basis, we would exit. So even though the fundamentals are not very strong, but the technical score is very high, our algorithms will end up selecting them. So that's what happens. But see, these are the positive sides. The negative side is also that a stock which shows you a breakout might again come back in that range, but you will end up buying it, and then you will end up selling it also. So those kind of things also happen quite a lot. But broadly, if you see over 5-year period, we have generated pretty good alpha using this methodology, and that's why we are pretty confident about this specific methodology.
Got it. So one question usually comes up whenever we talk about momentum, that they say that momentum or quant in a good market, it is very good at picking, right? Because it captures it very fast and you can ride the alpha very well. But in a bad market, people say that it also goes down because they've seen other examples in the market where it has gone down, right? What is your take on how to solve this?
See, there is no way to solve it. overall, broadly, long term, if you hold momentum, you'll get the best returns. But it's very difficult for an investor to just invest in the momentum factor and stay invested. Right. So the only way is this the way we solved it is through our multi-factor approach. That, as I said, that we'll end up selecting the top 10 factors according to us. So rest 120 factors are not getting selected. So the weightage to each of these factors we keep on updating. So if you are able to do that, which means that if the markets are growing, you give more weightage to momentum. But if the markets are falling, then you give less and less, or maybe even zero weightage to momentum. That is one way of making your portfolios more stable. But again, your the way you give weightage also has to be, that algorithm has to work well.
And is it easy for a retail investor to do this? Like, let's say he wants to run his own portfolio and he wants to
Very
make
tough. It's very tough, really. Yeah, it's very tough. I don't think in terms of, see, the multiple things. Obviously, you have to be interested in that. There's so much of data out there, right? There's so much of time and skill set that you need that it becomes very, very tough for a retail investor to really do that.
And what mistake do you think retail investor is doing right now? Obviously, we're in a beautiful correction. Now, from a quant standpoint, I don't think if you have momentum as a factor, it won't pick much. But if you have value as a factor, it will pick quite a few companies, right? So two questions. One is, what should investors do at this point? And second, if you have this value factor, what are some sectors you're seeing very good value companies coming out? Like pockets to look at.
Yeah, I think value is emerging in most of these sectors also. But the way also to think is, wherever you feel there is great opportunity in the next few years, those sectors really won't get corrected also so much.
So macro themes is what you're saying?
Right. So they would always be relatively more expensive. Let's say defense. I think defense is a great theme which over the next couple of years everyone is kind of convinced. And that's why if you see the correction, obviously you've seen earlier corrections in defense, but they're still relatively quite expensive. So if you just look at it in terms of valuation, it's not the complete story, but because you have to look at it in terms of their growth also, what's the expected growth over the next 3 to 5 years. And if the expected growth is higher, obviously you won't be able to buy them really cheap.
Correct. And where are you seeing value now?
So that is one thing. See, broadly, personally, the way I like to look at it is not in terms of sectors, but more in terms of large, mid, and small caps. And if you see historical valuations, large caps, I think, are very attractively priced, really. Large caps, and to an extent, small cap also now in the past couple of weeks have started entering that territory where it becomes slightly attractive. Not so much mid caps. I think mid caps are slightly expensive right now. But if you have to just maybe prioritize these three, I would put large caps at top, then small caps. Mid caps, I think I would still want to remain mostly away. Or if you are, let's say, investing in a flexi cap fund, obviously you're leaving that decision to the fund manager. But if you're taking that decision yourself, then I would say at least the new money you should definitely not put in mid cap, only the large caps and small caps. That is what I would say.
Interesting. And talking about India, I mean, we've seen a lot of problems since September 2024, right? Multiple tariff issue, and then we had the Op Sindoor, and then we thought we'll break out, and then again this war came in, currency depreciation, FII selling. So whenever there's bad news, the narrative becomes 2x, 3x, that it's extremely bad and dunya khatam ho gaya. I'm sure you've seen this at least 3 times in your life, right? 2000, 2008, I think 14 also there was a bad period. So what is your read on this situation?
I think what I said earlier, that if you are able to think long term, it gives you huge advantage. You pick up any 10-year period, really, Shashank. You'd see these kind of really big issues in any 10-year period.
Yeah,
so,
dunya khatam hone.
Dunya khatam. So 2000 to 2010, 2000 mein you had this Y2K. Huge correction. Almost, I think, Nasdaq corrected something like 80% then, right? Then 2008 was 50 to 60% correction in stocks, right? और तब भी ऐसे ही लग रहा था दुनिया खत्म होने वाली है. The financial system as we know it, we thought कि it could just go away, right? Even the big really names like JP Morgan, Citibank, Goldman Sachs, everyone was doubting them, really.
Yeah, damn.
Right?
That time. Imagine now.
Right. So everyone was doubting them कि whether tomorrow they'll be solvent or not, right? But still, over those 10-year periods, एवरेज रिटर्न्स घूम फिर के वो 12% के आसपास आ जाते हैं, 12 to 15 इन दैट रेंज, और मे बी ब्रॉडर रेंज इज दैट 10 to 15%, you get those kind of returns. Then next 10-year period also, if you see 2008 के बाद the next big correction was 12 13 में था, there was small correction, but major was in 2020 COVID, right? So every 10 years you have a big issue where markets correct about 50%. Every 5-6 years you have a slightly medium term kind of issue where markets correct maybe 20 to 30%, and 10% correction तो almost every year होता ही है, 10 to 15% correction, right? So I think next 10 years are not going to be any different. They'll be still same. You're going to see one big correction, right? I don't know the reason. Nobody knows the reason. It could be because of Iran maybe, or because of something else. It's very, I won't say very hard, it's impossible to predict. There'll be some smaller corrections. But at the end of the day, see, since last few decades, every time the average returns have been broadly in the range of 10 to 15%. That's what I would expect, really. And if you take that 12% number, Shashank, so at 12%, you will triple your money. So abhi Nifty is at what, 23,000?
आज
right?
अच्छा था,
आज
luckily.
अच्छा था. So 23,000. If you take a 10-year view at 12%, which is not a very big ask really, right? 23 ka, it will be 3 times. So that is 69, right? So markets would be somewhere between, let's say, 65 to 75, in that range, broadly hoga. So why do you sweat after this 500 point or 1000 point correction?
वो टाइम पे और होगा, हाँ.
है ना? तो वो 10 years, that's the view I take personally, and that's what I say कि if you really want to be invested in equity markets, it's a huge advantage if you can take a 10-year view, because then you won't really get biased by these short-term news. It's not really going to matter. उस time कुछ और issues होंगे, but the markets would be 65 to 75 in that range. That's what I play for. That's what everyone who is associated me, I ask them कि you have to play for that kind of move. कि 23,000 से 70,000, are you prepared to catch that or not? Then you won't really be worried. The kind of mistakes that investors make, that they come in at peak and they redeem at bottom. So now we have started seeing that.
SIP data came out.
SIP data came out. It's very clearly visible that so many SIPs are getting cancelled.
It's a big mistake, right?
Yeah, it's only happening because they are taking a short-term view. Now, it might be the case that their goals are such that it's maybe 1 year, 2 year, 3 year down the line. Then obviously equity is not the product for you. Then you should be more towards the bonds, debt side, right? Then you have no business of investing in equity. You should obviously stay away from equity if your goals are somewhere around 3-4 years or less.
So again, that same question I had asked you, right? Is it because investors, they have a trader mindset actually in the subconscious, they don't even know? Because they come in, they buy small cap, and then it falls 10%, they're out.
Exactly. So there's so many emotions that you have to go through, right?
खुद का पैसा जा रहा है.
Exactly. So it's very hard really. It's very, very hard for an average investor to remain sane, because there's so much of noise. See, trading or execution has become very easy, right? You are at a red light, 30 seconds mein, a thought comes to your mind and you can just execute. You can open your app, just execute. The cost is so low, right? So it becomes very easy to buy and sell. And that's why, because of all this knowledge also, now I think investors are much more informed also. But there's obviously so much of noise also. And that's why you don't see those kind of things that we were talking about earlier, that the average holding period of investors should keep on going up. You don't really see that. Obviously, there are few investors who are learning these things and improving. But then there's vast majority who have come in the last 5 years. Like I came in, frankly. When I started 2004-5, that's what I thought. It's so easy to make money in markets. I know in 24, when I was talking to investors, they were not happy with 20% kind of returns. They thought 25-30% is what even I can make. They used to say, कि आप अगर इससे ज़्यादा बनाओगे, then I would invest with you.
Oh my God.
But if you are just making 20%, 25%, उतना तो मैं खुद बना लूँगा. And they were making at that point of time. But yeah, you know, it's not sustainable.
Now they'll come back. Now they would have lost that money. I know some of my friends are doing this unique system where they're gamifying mutual fund buying. They are saying my job is to accumulate 1 lakh units. तो मैं वही फोकस पे रहूंगा. अगर नीचे गिरा तो आई एम वेरी हैप्पी बिकॉज आई कैन बाय मोर यूनिट्स.
Yeah.
So they don't care because they're like ये लंबा रखना है तो फायदा नहीं है. So I want to reach 1 lakh, then they go to 2 lakhs, then they go to 3 lakhs, which makes it very nice because you're not looking at the price at all. You're not looking at your returns also.
You don't need to look at
You're like
price
ये लंबा
really.
है 10-20 साल रखना है 30 साल रखना है क्या ही जाएगा. Small caps
That
are not
sort
going
of
to
thing
die.
you can only do if you are thinking long term. कि 1 lakh units I need to gather. You can't do it in 1 year. It'll take maybe 5 years, 10 years, whatever time it will take. So if you have that kind of mindset, it gives you huge edge. That gives you huge edge really. They're playing a different game.
Yeah, that's a good game to play because then you don't care about these short-term blips in the market.
You're able to sleep well at night.
Yeah, कि हाँ कल और गिरना चाहिए तो मैं और 5,000 उठा सकता हूँ units.
Exactly.
That's
Yeah,
the mindset. So one last question, sir. What about this war that we're seeing right now? I mean, this has happened before in the past in a similar space when we had the oil crisis. In Russia, Ukraine also we saw oil spiking and it did affect a lot of things. That time it went to 150. We are still at 110 and people are crying as if the world's over. But why is it feeling different this time? Or is it like every time it feels different?
I think every time it feels different. The slight difference this time is कि earlier US right now US is not dependent on any other oil. मतलब they are producing huge amount of shale oil also.
खुद का है.
हाँ खुद का है. And that's why it's not impacting that much to them. But obviously to other countries it is impacting a lot. So one big change you're going to see ahead is in the energy. I think there's a lot of policy focus is going to be on energy.
Self-sustenance of energy.
And both the traditional forms of energy and the renewables. So I think next 5 years, 10 years, there's going to be huge action in that sector specifically.
Do you think it's going to be accelerated now after this?
Definitely, yeah. Because everyone is going to look right from India, China, everyone is going to play that kind of game that they want to become self-sufficient, which is not easy. But yeah, India has been doing, especially in electricity, I think huge numbers. The solar energy being produced right now, it's I think more than a third, about 40% of India's electricity is now solar.
But why is it still affecting India? I mean, even though we have pushed.
But yeah, oil we are still importing. Much of oil, I think 70-80% of our needs we are still importing. So that's a big number.
So where do you see this shift? When will renewables or other forms of energy take over? We have to reduce oil. There's no two ways about it. It helps a lot of things in our life.
It will start happening from now on, right from next budget. You'll start seeing that sort of focus. On this specific sector. So it's not obviously over next 10 years it's going to happen. It's not going to happen overnight. So these sort of shifts would happen.
अभी तो अपना national security पे आ गया ना.
Yeah. So and you start seeing big companies also like Reliance, Adani investing a lot in renewables. And also you're going to see a lot of smaller to mid-sized companies also focusing on this.
Do you have a take on renewables? Because I feel there is slightly too much noise. Would love to get your take. Noise as in there is solar, now there is hybrid wind solar, nuclear का भी बात चल रहा है, green energy का भी चल रहा है और LNG का भी चल रहा है. मतलब there are 5 different forms we're talking about. Where are we going?
See, the way I would want to approach this is like what happened in the early internet days, right? There were many internet companies, maybe all of them were growing, but eventually you didn't knew which one would succeed really. But as a sector, if you took a bet on it, you did fine. You did very
internet
well.
Wins.
Right. But you don't know which specific company would win. I think same is happening with AI also these days. You might not know 10 years down the line who would be those few companies who would be the massive winners of this shift. But overall, this as a sector is going to win. So if you took a sectoral bet, that's a much better bet to take rather than on specific companies. And similarly with renewables also, rather than focusing on which specific company, whether it will be wind, solar, nuclear or what it will be, if you just look at it as a whole and see it as a sector, that's a much better bet to take rather than trying to figure out which specific company or which specific type of energy it's going to win.
Interesting. Yeah, I think lots to look forward for. I think after this dust settles, and as you said, I think the next budget, we're still very far away from that. But next budget, I think they'll have a lot of pro-energy, reducing reliance on other forms.
See, the way it has been happening in defense really. If you look at current defense exports, obviously still there's a long way to go. But I think 10 years back, we were one of the biggest importers really. And now we are fairly big exporters. Fairly big. Still long way to go, really. 10 years back, we were maybe exporting about 500, 600 crore worth
Yeah.
of defense.
Yeah. No, that I'm very proud of.
So
yeah.
from 600 to right now, I think it's 35, 40,000 in that range. 35,000 or 40,000 crores worth of exports in defense.
Yeah.
That's a huge 30x, 35x jump in last 10 years. And I think over next 10 years also, if we keep growing at 20, 25% CAGR also, that's a very big number 10 years from now.
Yeah.
So I think defense, energy, these are some sectors huge.
Will compound, the industry will compound faster.
Yeah.
Wonderful. Yeah. Superb, man. I think this was a great learning experience. I got a lot of knowledge. But again, thanks a lot for coming on this podcast and educating the audience. I know it's been tough times and a lot of people are also sad, but I keep telling them, boss, this is the time. Abhi
No,
nahi
this
karega
is,
to kabhi
the
nahi.
sale is going on really.
Abhi nahi karega to kabhi karega.
For someone who is thinking long term, it's really great time, I think.
A lot of people ask me, Shashank, कब तक गिरेगा? कब तक? अरे तेरे को क्या करना है भाई? गिरा हुआ
See,
है, ले
somebody
ले.
who has the money to keep investing every month,
Yeah.
for them it's a great time.
Yeah, I think the guys who have finished the dip, like because it's been dipping from September 2024,
Yeah,
I think
yeah.
we have bought all the dips.
Yeah,
अभी बोल रहे हैं थोड़ा ऊपर जाओ अभी ठीक है थोड़ा
Right,
green
right.
देखना है. But again, thanks a lot, sir, for taking your time and giving this knowledge to the audience. I really appreciate it. Sir.
Thank you, Shashank.
Yeah,
Thank you for having me.
Thank
Thanks
you.
a lot.